Okay, welcome to this next episode, guys. We got a industry veteran expert here as a guest, and I'm delighted to welcome Will Hardy. How you doing, Will? How you doing, mates?
Very, very well. Thanks, Lee. Nice to be here. Good to talk to you. Yeah, nice sunny day here in Essex. So looking forward to
Okay,
it.
so excellent, mate. So what we won't talk about Ipswich, obviously beating
No.
Spurs at the weekend. Well, that's a sore subject for me. But we're going to talk about brokerages, okay, and brokering, and pretty much the condition of the brokerages and that space in the UK. Before we dive into that, mate, just talk a little bit about your background here. Some
Yeah.
people will know you, some people won't. I don't think many will know you traders out there because you're normally on the other side of the fence when it comes to the trading world. So just give us a little bit of a background of yourself.
Yeah, sure. Well, I've been in trading and financial markets for over 30 years. So I started in the city, London, a very long time ago when I didn't have grey hair. And initially I was in financial futures. So for the first 10, 11 years of my career, I was a financial futures trader. Back in the day when we used to trade on exchange, so this was before screen trading. This was when we traded, on Life, the London International Financial Futures Exchange, which was a real trading exchange with pits. And so I was a trader and a broker, worked for a number of different banks in my time down there, Japanese bank, American bank, Lloyd's bank as well. Traded a little bit for myself actually as well. But around 2000, that exchange went screen based, most exchanges are these days. And so from there, I fell into, the industry that we know, which is spread betting and CFDs and Forex. And I've been in there ever since, so for the best part of 25 years, I've been in the OTC space over the counter, and I've worked for IG. I worked for IG for 11 years. I've worked in liquidity, LMAX, and for the last few years, I've been working with startups in the UK. So brokers that have just got their licenses, that are operating international operations. And I've been involved with trading. I've been involved with sales, business development, risk, all sorts of things. So yeah, I've been in the industry a long time, seen a lot of change, and that's where we are.
Yes, very experienced, and I suppose that's where we met, wasn't it, at IG when
It was,
we
yeah.
brought some clients to the trading floor there, and that's certainly changed up at IG now, Will. It's a different space. I feel how's COVID sort of had an impact? How's it impacted the brokerages and for people
Yeah,
coming into the
it's
city?
good question. I mean, I guess lockdown for brokers initially was a good thing, because all of a sudden, a lot of people, of course, or everyone was working from home, and so
Yeah.
certainly, at the start of lockdown, brokers saw a boom in acquisition, and
Mm,
obviously clients trading. A lot more people started to get interested in trading and how they can make sort of primary secondary sort of income streams from it, and that sort of bubble probably burst really, because again, the issue over lockdown was, again, of course, that people were kind of confined to their
yeah.
homes, and so it became perhaps a little bit difficult, over time, just to sort of sustain that initial peak that brokers saw then. But in general, the market has evolved quite considerably over the last 5 or 6 years. And, the catalyst was around the time that the UK, and we're talking about UK brokers here, sort of the UK went through Brexit, so then from a regulatory perspective, that meant that, the FCA, which is the UK broker, sort of uncoupled themselves with ESMA, which is the main European regulator of regulators. But if you remember back, Lee, of course,
Mm,
around this time when we had a thing called MiFID II,
yeah.
there were restrictions which were brought in around leverage and financial promotions and, just how brokers
Mm,
operate. And after we went through Brexit, FCA did maintain a lot of the, sort of new rules and regulations which had come in, through Europe. And, probably it's fair to say, that when you look at the UK market at the moment, it's certainly not stagnating, but it's not
mm,
growing perhaps, as it was 10 years ago, when we were seeing a lot more new entrants coming into the UK market in
Yeah.
Europe. At
Yeah.
the moment, if anything, what we're seeing is, is some brokers, either pivoting away from retail, so they're only really sort of looking at professional business or institutional business, or closing down completely. So I think
Mm.
at the moment what we have is a bit of a sort of a status quo where we've got the big guys. We know who all the big guys are. They themselves have had to evolve over the last 10 years. So a lot of the big brokers like IG and whomever else, are now offering, a properly
Yeah.
multi-asset service. So, they're offering physical equities alongside CFDs and spread betting, options, that's
They just
coming in,
bought
isn't it?
option. Yeah, they got
Becoming
the
quite
options, but
quite
yeah,
popular now, tasty trade.
yeah, tasty trade.
So yeah, I think that's been the sort of evolution of the market, where at the top end, what we're seeing is actually the big brokers not necessarily bringing out new technology, but just sort of expanding their offering from an asset perspective.
Yeah.
And at the tail end, what we're sort of seeing again, and this is where I think there's a bit of pain, is where you've got brokers who are maybe only offering MT4, MT5. It's difficult to promote themselves and get their elbows out, in the
Mm.
UK, and compete with those big established players. And so perhaps unsurprisingly, we're seeing some of those brokers, sort of losing interest over here. There's a
Yeah.
lot of regulatory red tape, to cut through now to run a brokerage, and some of these smaller guys are, kind of going offshore essentially.
Yeah. So going back to the leverage and ESMA and MiFID, that's for me. I remember that was a big impact for our clients because
Yeah.
they were going from 50 to 1, 100 to 1 leverage, then suddenly boom, straight down to 20 to 1, 30 to 1 leverage, and they couldn't do as much trading. I know it's a good thing that we're controlling risk here because we don't want anyone to blow out their trading accounts, but of
Mm.
course then traders then with a smaller size account can't really trade that amount of pounds per point if you're looking at a spread betting account.
Yeah,
So yeah.
very much so. So of course, Leah,
Mm.
you're right. Essentially, the reduction in leverage, meant
Mm.
that, as you say, clients. It's not that they couldn't necessarily trade, but certainly, their
Yeah.
perhaps typical trade size had to reduce. So as
Yeah.
opposed to a client, as you say, being able to trade 1, 200 to 1 leverage and trade
Mm.
10, 20 pound a point, whatever it might be on the FTSE or the Dow, all of a sudden, because clients aren't going to necessarily put more money into their account, but
No,
they still want to trade, but the end result of that, is that, sort of deal side had to,
had to come down.
had to reduce. Exactly.
Uh, and this was at the time it was a bit of a sort of a danger because then clients would go abroad. They would look for brokers offshore that would give them 100 to
Yes.
1 leverage, and that for me was a worse thing.
Yeah.
We know somebody that doesn't understand risk, giving them high leverage is going to be a bad thing. But somebody who is experienced trader, suddenly they've now been cut down on the leverage and they can't do the pounds per point.
Yeah.
So that was a negative. I felt that was negative, and the option of going abroad and opening accounts abroad, and then suddenly the broker disappearing, not answering the phone the next day. We've had those experiences as well. So I think that was a big impact on a lot of retail clients.
Yeah, very much so. So I mean that perhaps it wasn't a sort of an unforeseen
Mm.
outcome from the regulator, but certainly that is what we did see, and so essentially, as you know, I'm a real advocate for sort of trading with UK registered and regulated
Mm.
brokers, for UK residents, because you get the protection of the
Yeah.
FCA, the financial ombudsman, etc. So all of these protections are very important, and if you go offshore, you lose them, and so it's essentially there is a situation where for UK brokers who are also operating sort of international offices, that
Mm.
they are obliged to ensure as best they can that clients from the UK won't open accounts with their offshore entities. So for
Mm.
example, if I'm ABC broker, I've got an FCA license, and a UK client somehow sort of finds a way of applying for an account with my Seychelles
Yeah.
entity, then we're not going to open that account. We're going to redirect that client to the UK entity.
Mm.
Whereas you're right, though, when that client, though, finds an unregulated or a sort of a loosely regulated MT4, MT5 broker that's offering 1,000 to 1 leverage and other sort of incentives to open an account, they look quite attractive. But
Mm,
if things go wrong and that client, as you say, isn't returning, your calls or emails when you want to sort of withdraw some money or whatever the case may be, then there's a problem. So
yeah. Yeah.
yeah, it's I suppose, sitting on the fence a little bit. I guess the where the reductions came back to, kind of gave, sort of, the end user, the client, the ability to, still enjoy some leverage, but certainly not as high levels. So of course, that is still a benefit of CFDs and FX and spread betting, that
Yeah.
there is still leverage. But yeah, it's not as high as it used to be. So I guess, in the past, it could be argued that leverage was too high. Certainly
Mm,
for what the regulator would call sort of unsophisticated clients. And
mm,
around the time that this was all happening, I think the industry was looking, to sort of meet in the middle, almost, sort of a happy medium at a level which is slightly higher than where we settled. But yeah, I think that for people like us, we've been
mm.
trading a long time, we've been in the market a long time. We can remember back, to those days of, higher leverage. But I guess, perhaps for, new younger, sort of people coming into the space, where they haven't got that kind of memory, then, perhaps they're not too concerned,
That's right. Yeah.
about the fact,
Yeah.
that it currently is what it is in regards to leverage.
Mm,
But, I suppose, the
mm,
important thing is that if you're coming into this, then, back in the day, you could probably put £500 into an account
mm.
and, enjoy decent leverage. Whereas, realistically, if you want to have a decent size account and you're trading regularly and you might be having 2 or 3 trades open at one time, you're obviously looking now at having
Yeah.
a slightly higher starting balance.
Well, we'll look at funded accounts because that's been a new wave, and we'll dive into that. But let's go back a little bit. So you've worked at IG Index, and you've worked at other brokerages, spread betting brokers, new MT4 brokers that are starting out. Let's talk about a little bit how a broker makes its money. All
Mm.
right. Put your broker hat on. How does a broker make its money? Give some of the listeners, the viewers, some ideas of what the broker's thinking.
Yeah.
Try and, yeah,
Okay. Well, look, I mean, first and foremost, any broker, wants to to be doing business. Okay,
yeah.
so what that means is that they want active clients, on their book, who put that money in their account, as we just said, and they start trading. So essentially, a broker is not going to make any revenue at all if they have got no clients. So that's the
Mm,
first thing that any broker needs to get right. They need to be able to position themselves, and advertise themselves, promote themselves, be visible, to the kind of sort of person that is going to be interested in their services. Now, we've discussed this many times down the years, Lee. And of course, what we're going to go into here,
mm,
is how do brokers operate? How are they regulated? How are they authorized? To do the businesses
mm,
to do the business that they do. And of course, we
mm.
won't talk about anything other than here spread
Yeah,
betting, CFDs, and FX.
yeah,
The
sure.
leverage business. So um, I guess the first thing to remember is that in any case, just regardless of how a broker is
Mm,
authorized, they're offering an OTC
hmm.
service when you're spread betting or trading CFDs, and that
Over
means
the
over the
counter.
counter.
Yeah, yeah.
Yep. So the client isn't trading on an exchange. Essentially, when they're trading, it's a situation where a client opens a position, and the counterparty to that trade is the broker.
It's the broker.
So
Yeah.
the entity, rather, that's always on the other side of the trade that a client will open, is the broker. And then, of course, we go to the next level, and essentially there are 2 types of broker, in the UK under FCA rules. And we'll call the first type of broker, just a fully regulated, authorized, full fat
Mm,
broker. So they offer various asset classes, as a spread bet or a CFD. That can be commodities, gold, indices, such as the FTSE
mm,
shares, etc., etc. Um, and then we're talking about the two differences in regards to how brokers operate being what happens when you as a client does a trade. And so
Mm.
this full fat market maker, essentially being the counterparty to your trade, then has the ability to internalize or run risk. So
Hmm.
essentially that broker has no obligation, if you like, to automatically hedge or back off the trade that you have just placed with them.
Mm.
Whereas there is a second type of broker, it's called a matched principal broker under FCA. That's the sort of sub authorization, that this kind of broker holds. And under that kind of setup, that broker is obliged essentially, to run no risk internally. So they
Hmm.
automatically, if you like, back off, you know, the risk that they have just taken on when you as a client opens a trade. So to sort
Yeah.
of spell it out, sort of quite simply, let's say that I'm the client.
Hmm.
I buy £10 per point of the FTSE, and again, I trade with my made up broker ABC spread betting.
Hmm.
Okay, so at the point that I go long, I'm buying the FTSE, because that broker is the other side of my trade, then essentially they are short, because I'm long and they're the other side, they're automatically short. So we've entered into that sort of, that transaction. I'm buying it, I want the FTSE to go up, and that means that they're automatically on the other side.
Mm.
Now, under the match principal basis, that broker then has to, immediately back off, if you like, the risk which is attached to that trade. So with me buying it, and therefore the broker being
Mm.
short, what they will do is they themselves will buy it against a further counterparty, and that means then that essentially their risk is, well, their market risk is zero, because they've got one position with me, the client, they've got the opposite position with a further counterparty.
Okay,
So
so
yeah,
stop there, mate. So what do they actually do? Once I've placed my bet of
yeah.
£20, £10 short, where do they place where do they take their risk? Where does their risk go?
So all brokers will have a pool of liquidity. So essentially by talking about a pool of liquidity, what I'm sort of talking about is essentially is venues where they will hedge or execute trades for themselves. Okay, so those counterparties on this side could be a prime broker, like a bank. It could be
Mm.
an entity which aggregates liquidity. So it could
Yeah.
just be an aggregator who actually themselves are facing various banks or other market makers,
Right.
and
Yeah.
they bring all of that liquidity together to then send one set of pricing and trading through to a retail broker.
Hmm.
Or it could also then be individual entities who themselves are market makers in certain
Okay.
asset classes. And generally speaking, certainly big brokers will have a combination of all of those entities. So they don't only have one counterparty to hedge everything with. They'll have banks or aggregators or other pools of
Hmm.
liquidity, potentially exchanges as well. So futures
Okay.
exchanges,
Yeah.
where they will then hedge. Whether it's because they're reaching some limits, or as we go back to this match principle kind of broker,
Mm.
they have to do this. So essentially what they're doing, as I say, is backing off the risk which they will take on when the client does a trade. So,
So
to answer your question then, Lee,
yeah.
how do you make money out of that?
Mm.
Well, quite simply, it's down to, the fee that me as the client pays versus the fee that the broker then pays when they're, automatically hedging. And, essentially, for us as traders, we pay commission or spread. The broker will do that as well, but they'll pay slightly less. And so,
Okay. So
that difference is their margin.
let's look at an example. The FTSE's
Yeah,
trading now at 8,046.
yeah,
So let's say the broker that's providing this data here. So it's 8046 to 8048, mate. Okay. So
yeah,
there's a 2 point spread there in the spread
yeah.
betting broker.
Okay.
So I go long £10 a point. I've got a 2 point spread to pay. That means it's cost me £20. Yeah.
Yep, that's right.
Okay. So what does if the broker had to hedge my position, what would they be paying?
Well, so again, it will depend on the quality, if you like, of their own counterparty, and
Yeah.
so, again, actually right now, in the market, retail spreads are, the lowest they've ever been,
Yeah, they have. I
so,
mean, dealing me in the old
essentially,
days.
as if we were having this conversation 20 years ago,
Yeah.
spreads were wide enough to drive a bus
Yeah.
through, so, essentially now, when you're looking at the difference between what the broker is paying to place their own hedging trade versus what you as a client is paying in regards to spread, there is a difference, but it will be minimal.
Okay.
So obviously, again, if you're looking at that situation where you've got a 2 point spread on the FTSE, it could be, we don't know, but it could be that the actual, bid offer spread that the broker is seeing, is 1 point, or
Right.
it's
Yeah. Yeah.
0.8 or something like that. I mean, a 2 point spread is quite wide on the FTSE at the moment, isn't
Yeah.
it?
Yeah. I don't know. Yeah. Yeah.
Exactly. I know it's
I've
just an
just made that
example as
up.
you're using there, but exactly, but generally
Yeah.
speaking, if actually we look at the reality, most retail clients will see a spread on the FTSE of
Mm.
1.2. Actually, from a sort of an institutional perspective, perhaps the spread that they might be seeing is, zero point 0.6, zero point 0.8, so the difference is there,
Yeah.
but it's not it's not as if the broker is trebling or doubling,
No.
the actual raw spread, if you like, that they're seeing, so that markup, is, in the example we're using, perhaps 0.4, 0.5 versus, the end user seeing a spread of 1 or 1.2. And that's essentially, the model to generate revenue, so when
Yeah.
you do that trade, going back to your original,
Mm.
example, you pay 20 quid, the broker, if they only pay 10 quid, then on that round trip, that opening and closing of a trade that you've just done, that's how they make their money. They've made their money through the markup, the additional spread that you as a
Mm.
retail client are paying.
We'll carry on. We'll keep on this this question of how a broker makes their money, but also if, for example, let's say, for example, well, what they're trying to do, the brokers, is, I'm sure, is to manage risk and balance it out. As in, there's going to be people long, there's going to be people short. So I suppose that's all it gets balanced out. Now, what happens if, say, everyone is long the market, everyone is long with this particular broker? I mean, let's say there's a high percentage of traders that trade with this broker are long the market. They're obviously going to be short the market, the broker, because if the traders make money, if the majority of these traders make money, then the broker is going to lose some money, I suppose, because they're short the market, but they're going to hedge their positions. How do they manage that risk with it internally,
Mm.
Will? I mean, what happens these days? What happened in
Yeah.
the old days?
Well, yeah, good question. So, if we just refer back to, the example we've just used around,
Mm,
this matched principle, STP, straight through processing kind of broker, where they're not actually internalizing any risk at all. They're just essentially mirroring, the trade that the client does,
yeah.
into a further, counterparty down the food chain, if you like.
Mm,
In that situation, of course, then it doesn't really matter, whether clients are, net flat because half your clients are long and short at the same time, or as you say, that clients are, 80% long of a market or whatever the case may be. The broker in this situation isn't profiting, from, clients making or losing money. They're just profiting, they're generating revenue from
mm,
that trade turnover.
yeah.
So in that situation and that business model, the broker is purely interested in clients trading. The more they trade, the more they make out of, the markup, if you like, in cost that we've just described. Now, the second kind of broker, though, as we know, then is the market maker broker, and these guys are able to internalize risk. They don't have to automatically hedge every single trade that a client will execute with them. And so, we speak about this, and
Mm,
because of that fact, we know then, that when clients lose money, if the broker has, not hedged any of their exposure whatsoever, then the broker will make that money. Okay. And
mm,
of course, that's uncomfortable for some brokers. They don't like the idea, of a broker trading against them.
yeah.
Whether or not that's true, we can talk about, but
Mm,
essentially, you know, looking then at the scenario that you outline, so you're right. When markets are generally moving sideways, if you look at European markets over the
Mm,
last 2 or 3 weeks, they've kind of fallen out of that uptrend that we
mm,
saw earlier this year. They've been going sideways, and
mm.
actually, some brokers, publish their sort of sentiment figures, don't they? So they show
Yeah.
how many clients are, long or short of a market at any one particular time. And we will have seen, over that time, where client sentiment is roughly neutral. So in that situation, from a broker perspective, I've got half my clients buying the FTSE, the other half are selling the FTSE. My risk, my exposure is
Mm,
pretty flat in that situation. And, essentially all I'm doing then is picking up the spread, aren't I?
yeah.
I'm sort
Yeah.
of picking up, the difference, between what people are buying and selling at.
Mm,
And in that situation, it's I'm not going to call it easy, but essentially, you can see, on your risk monitors in, just within a broker, that things are not in a situation where you need to take action. Now, these brokers, that can run this risk, can't just run, unlimited risk, until the cows come home. So there
mm,
are some, prudent, sort of limits which are put in place, essentially based on how well capitalized a broker, perhaps is, but also, just in regards to their general appetite for risk. So,
mm.
in that situation that you outline, Lee, then of course it's not as if a broker can't act earlier, or wait until a limit to be breached. But essentially, the likelihood is that the broker will have, limits on each market or each asset class, which they
Mm.
are prepared to run until they start, hedging their positions. So,
Sure.
it could be in that situation that you outline, when, all of a sudden markets are, sort of trending, violently in one direction, clients are all getting in on a move. Again, I come back to it. Brokers want flow. They want some,
Mm,
skin in the game. That's how they're ultimately going to make money. But yes, if
mm.
internal sort of risk limits are breached, then at that point they will have to start, reducing their exposure by going to the market.
Yeah. I mean, I've had two brokers go bust on me. I've got the money back on
You're
both of
too
those
good.
accounts. Yeah. I woke up one morning, went to log into my account and they've disappeared off the face of the earth. And so, what's going I know you can't talk individually, but obviously they were paying out profitable traders from client accounts. What's that all about? I mean, what's the rules and regulations around that? Well,
Well, I mean, look, if a client makes money, then a client makes money,
mm,
and that's fair, And if they then want to make a withdrawal, then of course, there's no reason to stop a client from doing that, So, I can't quite remember which brokers you were with, but essentially, you know, the way any brokerage is run, just to sort of, run things to ensure, that we're meeting regulatory obligations. And no broker, it's certainly in the UK, would ever want to be in a situation, where and they should never be in a situation, by the way, that they are unable, to sort of pay out, client profits, So I think, perhaps some of the situations that we're talking about, were, we think back to the Swiss bank, kind of
yeah.
thing, for example,
Mm,
where that was a black swan event, and
mm,
a handful of brokers were taken down by that.
yeah.
It was kind of extreme, kind of market conditions. But yeah, I mean, look,
Yeah.
in general, I guess what we can say, as I say, if I think back, to the two different brokers, the STP broker will always be able to, essentially pay a client a profit, because it's not their profit. Essentially
Mm,
they've made the same amount from the market. So you as a client makes £1,000 trading the FTSE. The broker has just made the same amount. So paying you your profit is not a problem. Because essentially it's been replicated in their own trade. From a
mm,
market maker perspective, again, um, there is no issue. There is no issue. If a client is consistently successful over time, then I would say, it's very rare that any broker will not want that business. How they
mhm,
handle that business could be slightly different, to the sort of general pot of retail, if you like. But there should never be a situation where there's any sort of dilemma or issue, when a client has made money, for that broker to honor the profit.
Okay, mate. Other ways brokers make the money, overnight interest charges.
Yeah.
And can brokers decide their own overnight interest charges? Can they charge you more or less? Or what's that all about?
Well, yeah,
Obviously.
exactly. So, so first and foremost, you're right. It's a key feature of,
Mm,
spread bets and CFDs and FX, that there is a cost of holding a position overnight. Now, ultimately, that's because, the products are offering leverage trading, so
mm,
you got to remember, that when you're doing that £10 per point on the FTSE at the moment, where the market is 8,000, just whatever the number is, so essentially, £10 per point on the FTSE, whether you're going long or short, you're essentially taking on £80,000 worth of exposure at this point. And your account has only got, of course, potentially a small amount of money in it, because you're leveraging, you're able to trade a margin, and multiply, your exposure based on the amount of money in your account. So because of that fact, there is always an element of lending or borrowing taking place, so that is why there is financing,
mhm.
essentially, as I say, you open that position, you're holding it overnight, you're borrowing money to open and maintain the position. So there is financing. Now, most brokers will generally, base their financing on, short-term interest rates, so certainly for indices or shares, it's normally going to be something like a 1 month, sort of rate, which is relevant to the product you're
Mhm.
trading. So obviously, if you trade the FTSE, they're going to be, basing their financing on sterling overnight rates. If you're trading dollar indices, then that's going to be based on the dollar. Um, and essentially, what they will do is take a 1 month rate and they will add again a markup to it. And so generally speaking, the markup in the UK for these kind of products is plus or minus 2.5%, 2.5 or 3%. So with our rates at the moment, being just shy of 5%, it means that if you're going long, you're going to be paying an annualized rate of about 7.5% at the moment,
Mhm.
because base rates are around 5 plus 2.5% markup. Whereas, of course, if you're actually shorting the market, you will right now be paid interest, to hold that kind of position, because the adjustment there would be the reference rate 5% minus the markup 2.5, but it still means that the client is making money. So the justification is because it's a leverage product. But to answer your
Mm,
question again, Lee, as to is there any limits beholden on
mm,
brokers? Well, not really. But at the same time, this is the same with cost of trade and spread or commission.
mm.
You know, if a broker is completely uncompetitive with their rates, then they're not going to do any business. So
Okay.
it's not as if the market sort of self polices itself. But to an extent, the market actually has always been a markup of around 2.5, 3%, for the last 20 odd years, and that's the sort of standard really.
Okay.
So brokers can be lower than that. Some are. Brokers could be higher than that, but I'd suggest that if they were, they're probably shooting themselves in the foot at the moment. Again,
Okay.
and again, if we think back to where we were 5 years ago, pre-lockdown, in regards to interest rates, when all major
Mm,
economies rates were around zero, financing perhaps wasn't as significant as it is today, because
yeah.
again, with rates, across, the US, UK, around 4 or 5%, then actually, it's a very important thing to look at. Financing,
Yeah.
if you hold a trade for a long time,
Definitely.
can
Yeah.
add
Yeah.
up.
Yeah. I just got done £500. Well, not done, but £500 rate commodity on natural gas commodity rates.
Right. Yeah.
Uh, I actually could not understand exactly what the explanation was around the commodity adjustment because
Yeah. Yeah.
it was quite big on natural gas. And
Yes.
anyway, so is there any other way? What else do they do, brokers? Is there anything else where they make their money? Of course, on the spread, on the interest rate overnight of adjustment and holding that. Any other ways at all? Obviously, the client
No,
losing money, maybe,
no,
and
no. Well,
if
well,
they're not,
well, well exactly. But
yeah.
again, I think that just going back to the point,
Mm,
where and it's a question, isn't it? The
mm,
your clients, have asked me down the years many times, which kind of broker is better,
Mm.
should I be trading with, this market maker, or should I be trading with an STP broker? The assumption would be that the STP broker, is the best broker to trade with, because again, they're not, trading against you insofar as, if you lose money, the brokerage isn't pocketing it, if you like.
Mm.
And my view on it, again, if we'd have been having this question
Mm.
conversation 20 years ago, Lee, it would have been very different, but really what I see in the UK, is no major difference between, the kind of brokers, that we're talking about here. And so, I would always say, that the best broker, for you as a trader is the broker that just, meets your needs. For some
Mm.
clients, they want, a proper multi-asset offering. They want to have a number of eggs in one basket, whereas other clients will want, purely good pricing on an index or a currency pair, where other specialist brokers will be able to offer that kind of service. Is there any other revenues? Well, really the main ones are spread and um,
Mm.
financing, and all brokers will charge that. Say, look, the business model for market makers, of course, is also including, P&L, client
Mm.
losses, versus client wins. If we look at, most UK and European brokers' websites right now, of course, brokers are obliged again to have the percentage risk warning on the
Yeah.
homepage, so we see, that typically speaking, 70% of clients lose money.
Yeah. Yeah.
There's no nuance there,
They're hot
so
on that. I mean, our partners, Tradenation
yeah,
and others, I mean, they're
yeah, it's
hot
very
on us
important,
updating our website with this. And
very
obviously
much
they
so.
want that to be going down, really, to be seen that it's going down, that
They
now there's
do,
only 67%
yeah,
of traders are losing money with this. If you get something where it's 74, 75% of brokers, of clients losing money with that broker, then I
yeah.
don't think they actually like that. So the compliance from the brokers are quite hot with that, Will,
They
contacting
are. They are.
partners
I mean,
and
look,
us.
of course, brokers don't like that
No,
message. As I was sort of going to say, and
no,
there isn't any nuance in there. So of
no.
course, what anyone who's on that website won't see, is whether that 74% of clients, well, number one, how many clients that actually is, and then
Mm.
number two, whether that client has lost £50 or, you know, 50 grand. We just
Yeah.
can't tell that from the actual, sort of percentage number. In reality, the fact is that, as we know, just from working with, clients down the years, that
Mm.
typically speaking, clients might make or lose something in between, 2 or 3 grand, so,
Mm.
it's not necessarily sort of life changing, but then you have the extremes as well, where you do have clients that make a lot and who lose a lot.
Exactly.
But
Yeah.
you're right, and for what it's worth, brokers update those numbers every quarter, so they're updated 4 times a year. But generally speaking, again, I haven't done it myself. I haven't plotted the charts, but I suspect that if you were to look at all brokers' percentages over the last 5 or 6 years, and that's regardless of whether they are a market maker or an STP broker, by the way, that the numbers would be relatively similar. As you say, it's normally around that sort of 60 to 75% mark. Anything higher than that is unusual. We've certainly seen it, but it's unusual. And yeah, then if you're sort of seeing something around a 50% number, then that's again
Well,
pretty rare.
that's pretty
For,
rare, mate. It's pretty
yeah,
rare.
I mean, quite frankly, for me, that's always perhaps suggested, that the broker hasn't got many clients,
Yeah, he's got the one
but
client that's
exactly,
yeah, one
who
or
just
two
happens to
clients.
have won.
And then you got to be alarmed when there's somebody, the broker, 75% of clients, nearly 80% of clients.
Yeah, but
That
again,
for
I
me
think
is
that, and look, I'm not sort of trying to defend anything here, but
mm,
market conditions, run into that, just as we're talking,
sure.
when markets are going sideways, or when at the moment what we're seeing is, we've had a big bull run, haven't we, in 24?
Yeah.
So equity markets have been up, gold has been, reaching new highs. So all markets are generally going higher, and generally speaking, clients normally go long, even though a client has the option always of going short on something. They're
Mm,
normally sort of looking for buying opportunities, and so again, I think that this year in particular, that the percentages are lower year on year because I suspect, that more clients have been holding on to winning trades.
Sure, sure.
But yeah, I think, that it's there obviously for a purpose, which is really, just to sort of outline the risk.
Mm,
Um, I guess arguably, if you look at 10 different brokers right now, as I say, the numbers are all going to be, within sort of, 5-10% of each other. So whether that makes it worthwhile or not, I don't know. But, I suppose the bottom line is that
mm.
when, certainly new clients are coming into this, they just need to be aware, that these products are, classified as sophisticated products and there is risk involved.
Thank you for the risk warning. Right. Okay. Let's talk a couple of things here about widening the spread. So around news announcements and volatility
Yeah.
times. Okay. I'm sitting in my lounge with my daughter, looking on my phone, and the pound US dollar spreads goes out. This is COVID time, goes out to 80 points. 80 point wide. My position gets closed down immediately, and I just see the P&L just drop into negative territory. And I phoned the broker the next day, and they said that was so unusual. We've never experienced anything like this before in our lives. They put me back into the trade. Okay, so I was back into the trade. But just around that was an extraordinary situation because that was COVID. But what about just on a CPI announcement? Why do they widen their spreads? Tell the listeners, clients that are listening to this, why do they widen spreads? Or is it something that comes from their liquidity provider?
Well, that will be the root cause of it, Lee.
Mm,
So again, brokers don't want to be showing uncompetitive prices.
mm,
So I'll always come back to this. Particularly, again as we've discussed, the market has matured and evolved, so much over the last, sort of 20 years and 15 years in particular. And I also, sort of have to mention, that we're talking about FCA brokers here,
mm,
from a regulatory perspective, brokers have obligations, to ensure, that the pricing, that they're showing clients, is reflective of the underlying market. They
mm,
have obligations around best execution, so ensuring therefore, that brokers from a pricing and clients rather from a pricing and execution perspective are being treated fairly, that they're actually sort of seeing something which
mm.
is indicative of the underlying market. Now, we have to remember, I guess, as well then, that brokers are offering, this service, where they're offering retail clients execution where they wouldn't get elsewhere.
Yeah.
I or you couldn't walk up to Goldman Sachs front door and start opening an account with them and saying I want to trade against your head of FX, because we're
Yeah.
retail. They're not going to face us. And so you know I'm going in a roundabout way to answering your question here, but it just means that that when these situations occur, it's not just because a broker is kind of all of a sudden thinking, oh, let's have a bit of fun and blow out our
Mm,
cable spread from 1.2 to
mm.
400. It's because something has happened in the market.
Sure.
Liquidity has dried up for some reason. Now, again, just thinking back, there were these odd occasions, and I do remember the situation that you spoke about, where you had a position in cable, but it was, I think, across all majors at the time, that
Yeah.
evening, because it happened, didn't it, in the morning, early morning UK time,
Mm, mm.
the liquidity essentially, just dried up,
Right.
and so with FX pricing in particular, and for brokers, and again, let's remember, STP brokers, their pricing is beholden on their source of pricing. So if their liquidity providers, their pool of liquidity all of a sudden goes wide, then their spreads are going to go wide as well, because if there isn't,
Mm,
and clients are trading here, but the actual counter trades are being traded out here, then there's going to be a problem. So sometimes, as you say, we know when events are going to occur,
mm,
payrolls, any
mm.
sort of
Yeah.
economic announcements, they always come out at 1:30 US numbers, and sort of 9:30, whatever it is, or pre-market for UK European. So when those events happen, we know they're going to happen. So part of my advice, to some traders would be, don't have a position over payrolls because of this situation that you outline. There
Mm.
is a possibility that if a number comes out and it's nowhere near expectations, that all of a sudden, all of the market makers, the banks and whomever see that number themselves, and
Yeah.
they pull back their pricing.
Right.
They basically, that themselves have to sort of, assess what's just come out, almost, kind of, just reassess what their position is, in certain
Mm.
markets, and then potentially, tweak their pricing to reflect what it is that they want to achieve. And so it's
Right.
not unusual, when, sort of events happen and they are not within the sort of, limits of expectation that you might see. And of course, we may only be talking here about, sort of a very short period of time. It might be, a second or 2 seconds.
Yeah.
But, as you say, and you're right, if within those 2 seconds spreads, completely sort of go out and the market moves, 300-400 points in one direction, the combination of that, ends up meaning that you get stopped out,
Yeah. Yeah.
and so,
Yeah.
I think we're talking about, potentially sort of, two different scenarios here, but with
Sure.
the same outcome, known
Yeah.
events and unknown events. And so, yeah, you're right. I think, I don't know which broker you were trading with, but I think that it's an important point that you've just mentioned there. The fact that they were able to put you back into your
Yeah.
trade, probably meant that something happened. They understood where you were coming from, and then were able to reinstate you. Whereas actually, if it was an STP broker, they wouldn't have been able to have done that because
No.
your trade would have been out,
Yeah.
at root source, if you like. And so there would be very little that they could have done with that.
Well, I
So
saw it as an unfair price, and so
yeah,
they've
yeah.
got, they've got a obligation to give me a fair price, haven't they?
They have, so
Hmm.
I mean, look, obviously don't know exactly what happened in that situation. It could be that it was a goodwill gesture or something
Mm.
like that.
Yeah.
Which meant that they
Yeah.
reinstated your trade. But I think again, the important thing would be, technology, of course, isn't infallible. So
Mm.
technology can break
Sure.
sometimes, as we know. Platforms can go down, and all of a sudden pricing, can be completely wrong.
Mm.
I've had situations, where all of a sudden, in our DAX feed or our Dow Jones feed, it's showing gold or something like that. So these things can happen. They happen rarely, but they can happen. And in that sort of situation where there's a manifest error, it's obviously incorrect. All brokers are going to put you back into the trade. But
Yeah.
I suppose
Mm.
the point is though is that when the broker did that, it would have been a reflection of something that was happening,
Yeah.
because
COVID. Yeah.
there'd be no reason to do it unless it was, say some sort of technical difficulty that they were in, So something at that point would have happened in the market,
Mm.
which meant that liquidity dried up, prices then, sort of mushroomed, and therefore also broker prices did the same. So
Hmm.
that doesn't breach any rules, when there's a completely legitimate reason, for spreads going wide. And so, as we will know, that when that can happen, clients have a bad experience, they get stopped out, it's great when clients sorry when brokers can put you back in, but
Yeah.
if there was a legitimate reason for the event to have happened, and as a client, of course, you're absolutely justified to ask questions, and if you
Mm.
don't like the first answer, ask the question again, why did this happen.
Mm.
Some brokers will be able to show you data from their underlying liquidity pool, which actually shows, the price movement that they were seeing, which then, essentially meant, that was then, reflected on their own pricing on the platform.
Okay, mate. Thanks for that. What about this? And I'm sure every trader's thought the same at some point. Can a broker run the price to take out stops at a
Mm.
certain level? Can a broker move their own price? It has to,
Well, the technology is there.
has it done?
Okay.
Has it been done before
Well,
in the old
look,
days?
I can't, I obviously can't sort of speak on behalf of every single
No,
broker,
of course you
but
can't.
what I can
Does
do,
it happen?
is go back to, well, let me put it like this, and
Mm.
of course, again, let's remember that we're talking here about FCA regulated
Sure, sure.
brokers, because if we were talking here about unregulated brokers or brokers, you know, regulated via a rock in the
Mm.
middle of the Pacific or wherever it might be, then of course those guys, will play all of the games under the sun to ensure that clients, will have a bad experience.
Okay.
What I just have to come back to here, is best execution,
Mm.
and what that means. And that means, essentially, the price any broker is making, has to be reflective. It has to be indicative of the
Mm.
underlying market.
Yeah.
Now, for certain asset classes, that's easier to do than it is for other asset classes. So
Hmm.
if, for example, you're trading shares, if you're trading a FTSE 100 share, okay, that independently, should you need to, that you can go onto the LSE website, and if you're able to, you can take out time and sales, which will show exactly what that price of that share was at any one time. And if I'm just offering sort of equity CFDs or spread
Yeah.
bets, excuse me, all I'm doing in that situation is tagging my spread around the underlying market. Okay. So certainly with certain asset classes, it's very transparent. Unfortunately, there's FX has always been a problem, because FX, spot FX, there isn't a single venue, exchange, if you like, where all of these markets are traded, and so that's where it's a little bit opaque. Excuse me, and that's where perhaps clients might have sort of, or rather, there's potential
Mm.
to be more disgruntled, particularly around FX. Um, I can't, as I say, answer your question on behalf of every single broker. It shouldn't happen, Lee, because there should never be
Yeah.
any reason for a broker to go stop hunting. Um, and as I say, if you as a client ever felt
Mm.
you're in that situation, get some
Yeah.
data, get some data and check it out.
So what's happened over the years? You'll see a client come to us or hear that price has gone here on an FX pair, and they looked at another chart and data
Yeah,
feed. Price didn't trade there, but they got stopped
yeah,
out on the original one. And
yeah.
that is, of course, there's no central exchange for FX, and
No,
but
precisely.
but there's still a euro dollar price, and euro dollar is pretty much euro dollar, isn't it? And
Yeah,
it
yeah.
can't be
What
that
it
much of a
is.
difference between broker to broker.
No, but there can be a difference, and
Okay.
again, it's essentially just down to the fact that brokers aren't obliged, to have access to, or use the same liquidity pool,
Yeah.
you know, as every other broker does. So you know, situation could be again, that I'm ABC broker, and I take my FX pricing from
Mm.
venue A, whereas XYZ broker takes their pricing and execution from venue B. So
Hmm.
it could be within those two hedging venues that there are the same entities pricing, but not necessarily all of them. So it could be the case that actually, and if you look at two trading platforms right now, for FX, it's you're rightly, you'll see very similar pricing, so it
Mm.
might be identical, but it might only be 2 or 3 4 5 pips difference. Um but as we know, when you go through that situation and you get stopped out,
Mm.
and you look at your broker's pricing, and you think, well, why did they go down there? Because
Yeah.
I'm looking at my other account, it went down, but it didn't, it fell short five
Yeah.
pips Those 5 pips can be,
Yeah.
expensive to you.
Yeah. Of course.
So
Yeah. And the
yeah, I
client's not
mean,
going to like it.
client's not
If you,
going to like it.
yeah.
Client has a bad experience.
Yeah.
Justifiably, they're going to be asking questions.
Mm.
But I suppose the answer to
Mm.
that I can provide is just be aware of this fact. So if
Sure.
you are trading certain asset classes, and something happens on your account here, it's not necessarily going to be the case that your broker has gone looking for your individual stop,
Yeah.
because the pricing with another broker you know went down but didn't quite go to the same level.
But
So
the broker can see his pricing and see where his traders are trading at,
well, it's in
and
the
probably
system.
it's in the system, and they can
Yeah.
see where the stop losses are. And
Yes, because obviously all of those orders are going to be
yeah.
within their risk tech. So
Yeah.
essentially, and let's remember, that a broker these days, is running their risk, book through technology,
Yeah,
so
yeah.
it's not all manual hedging now. It's not a case of, that I'm looking at a price moving and I've got, a clipboard here and I'm sort
Mm,
of thinking, oh, I can see Lee's stops getting a bit close. I might think about, on purpose, stopping him out.
sure.
It doesn't work like that. So this again, is where,
Mm,
I can take confidence, if you like, from, the market to know, that, any broker, that is individually looking for stop losses to take them out, is going to be rare as hen's teeth for me. It just
yeah,
doesn't work
sure.
like that. And I think, that it's that kind of emotional thing, though, isn't it, that we go through as traders? I mean, I trade as well. I get stopped out regularly. I get stopped out, within, 3 or 4
Sorry to
points
hear
of the
that,
high
mate.
or low. It always happens. If I'm sort of looking for, and I'm not saying we all do this, but certainly, we go through this kind of, this process from time to time. You've done a trade, and the most frustrating thing, as you say, is that you've got a trade on, you've put a stop loss in, you've set it overnight, you then log in
Mm,
first thing in the morning, you see that your position's been taken out, but the market has rebounded, and it would now be in profit, or just kind of where you expected it to be, at this point. And so there's nothing worse than that happening. And of course,
mm.
we all immediately think that my broker is working against me,
Yeah,
because they
yeah.
can do. I just don't really think it happens much in
No,
reality.
I mean we've gone on for a long time, and I've got so many more questions for you. I think we need to do a part two at
We'll
some
probably do
point,
part
Will.
two, exactly.
Yeah, because the guaranteed stops and all sorts of things like that. I want to ask you what goes on there, um, and so as when orders don't get filled as well. But let's so if somebody isn't happy with their broker, something's happened.
Yeah,
The order's not been filled. What should and what's it like from the broker side when I'm going to make a phone call to you as the broker to you,
yeah,
and I want to make a not a complaint, but I'll ask a question. Why did my order get filled?
yeah,
What goes on your side? What do you do then if I didn't get filled on the FTSE at 8,001?
yeah.
What happened? I'm not happy.
Well, so as I say, first and foremost, if you as a client have got any reason, to
Mm,
ask questions, then ask those questions.
yeah,
So first and foremost, every client should do that, and should remember, that brokers have, teams there to help you, to support you. Okay, so all brokers now, will have a customer services team. Essentially, if you as a client, essentially, sort of come in and you query, an order being filled or not being filled or something happening, then the general process would be, that the query is escalated to the dealing desk. The dealing desk will take a look at it, and they will provide a response. So
mm,
essentially, if you know, uh, you know, well, essentially what they would
mm,
just provide is evidence, to show why what happened has happened. And essentially, that could be, as I say, providing, data from an underlying
mm,
execution or hedging venue, or just giving an explanation as to what happened when and why. Because again, being on that side of the fence, clients, of course, some will be
mm,
more kind of experienced, if you like, than others. So from time to time, you'll have clients, that trade in certain asset classes regularly, and so when something does happen, they know how to essentially sort of make a query. They know what sort of information they're
sure.
expecting back, and if they're not happy with the first response, they'll go back again and they'll ask for more information, rightly so. Whereas, for other clients, it's just an explanation as, why something happened. And it could just be as simple as, that, and I remember, going back to IG days, it happened quite a lot, where, a client, for example, has got a position in the FTSE, they then, get stopped out overnight, and, they just didn't, they didn't realize, that the broker is quoting markets 24 hours a day, even when the
Right.
underlying market isn't open. So
Yeah.
as I say, in any case, there's always, a team there that are going to, take your query and have a look at it. And make sure that you get an answer that you're happy with. We don't like losing money, but
Hmm.
sometimes the reason why is legitimate. If you feel that there's a necessity to ask again, carry on. And ultimately, of course, all these brokers are FCA regulated. If ultimately, you don't feel something has happened fairly, if you feel that there's a problem, then everyone is, obliged to make a complaint.
Okay, mate. So with that, when you say if I'm making, let's say, what would happen with a broker? You've got the overnight shift on
Mm.
in a London brokerage, and I decide to place a larger trade at £1,000 per point.
Yeah.
It's 1 o'clock in the morning. And what goes on then? Do alarm bells go off? Because that, if it's a smaller broker, obviously the
Yeah.
risk would be much higher. Um,
Yes.
would alarm bells go off inside the brokerage with the night
Well,
shift?
yeah. So, essentially, what you'd normally find, just at most brokers, Lee, is that that their pricing will be good in a certain amount. So
Mm,
that means that the client will be able to trade, up to a certain amount of pounds per point or lots, and those trades will be accepted. So as we know, the limits will be higher in hours. So
mhm,
for example, again, you use that example. If you're trading £1,000 per point or FTSE, right now, for example, 12 o'clock, some brokers, will happily accept that. It will go straight through. There won't be any referral. No one will have to look at it, because they're set up,
mm,
to facilitate that kind of trade. £1,000 per point would be 100 lots of FTSE futures, for example. If they've got that access to liquidity, then they're going to accept that
mm.
trade. But you're right, in the middle of the night, that liquidity is not in the market. So, either a broker will lower the limits. And, so from this perspective, I always say, it's really important to make sure that what your broker's limits are. Most brokers' websites or platforms will include their market information sheets. That tells you what their pricing is at certain times of the day. It normally also tells you what the maximum trade size is at certain times of day.
Oh, okay. Right.
Yeah,
Okay.
so in that
Yeah.
situation, all I could sort of say is, if
Mm,
the broker's set up, but their maximum out of hours, trade size is £200 per point, then your trade would likely be rejected,
sure.
because it's fallen, it's just way above the maximum size that they will accept at that point.
Okay. So let's just dive. I mean, it's gone on for quite a while, but I want to just mention. I know you've not come from this background of funded accounts, Will,
Mm.
but I'd like you sort of, what you do know about funded accounts. There's been a big wave into these new brokers that are starting up, if they are a broker, and
Yeah.
they're funded accounts. And
Yes.
a lot of our clients have got their own funded accounts.
Yeah.
Um, and then there's brokers now, funded account brokers that have disappeared. Some big players came in, supposedly big players, and now they've disappeared. So how do you see this in the future? I mean, what do you think about funded accounts and compared to sort of normal brokers?
Well, so first and foremost, you're right. This isn't my area of expertise, but certainly, from a brokerage perspective, you know, the entities, started appearing, didn't they? Kind of late
Yeah.
teens. Just pre-lockdown was the first, sort of two or three that, became quite big. I suppose, first point is that kind of funded accounts and prop trading, has it's not necessarily new, so
No,
even if I go
no.
back to my futures days, there was, sort of brokerages that would, back, traders and fund
Yeah.
traders, and then you'd have a profit split sitting behind that. Um, I think the difference now, though, as you say, is essentially what these good guys were initially very good at, was marketing. So and they were very clear about who they were looking to appeal
Mm,
to, and again, my experience suggests, that the typical kind of client, or certainly 3, 4, 5 years ago, was someone who was looking to get into trading, but with a
yeah.
very, very small amount of money to
Mm,
start with. And the opportunity, the advantage of looking at funded accounts and these kind of businesses was that if I pay for a couple of challenges, which might only take up £200-300 from me, all of a sudden I've got a 10 grand, 100 grand account or something like that,
Mm.
and I'm a trader, and so
Yeah.
essentially I can totally understand why it's appealing. And
Yeah.
from a brokerage perspective, I certainly remember looking at this, as I say, 5, 6 years ago. I spoke to some of the guys in the space that were looking to kind of lease technology. And I suppose, I was kind of struggling to see from a brokerage perspective how I could monetize it,
Mm.
because the company that was running the shop would be making a lot out of the fees,
Yeah.
because again, you know more about
Mm.
this than me, Lee, but
Yeah.
my
Yeah.
understanding would be that most people don't go through the whole 3 or 4 or 5 challenges to actually get the
Mm.
actual sort of honey at the end of it. And so from a prop perspective, they're obviously collecting all of these fees,
Yeah.
and there's absolutely no risk whatsoever involved from a
Yeah. Yeah.
a trading or market perspective. But it certainly caters for a certain element of the market.
Yeah.
Perhaps again, someone who just hasn't got the funds necessarily to commit to a trading account straight away, may not even qualify for a trading account straight away. I mean, that's
Mm.
another thing
Yeah.
we need to remember from a UK perspective.
Mm.
There's this concept of appropriateness.
Mm.
If you don't meet that, you can't have a trading account with a
That's right.
a
Yeah.
regulated broker. But
Mm.
yeah, so from where I sit and from what I've sort of seen, over lockdown, massively popular.
Yeah.
Obviously, went through a massive boom at this point. I understood, that the cost of acquiring new traders was very low. So some of these, sort of outfits were very efficient in regards to,
Yeah.
acquiring clients and collecting fees,
Yeah.
etc. And not
It's
many
social.
clients, as I say, exactly,
So social
totally
media,
social,
that's where,
completely.
you've got the young people want to get into trading
Yeah, yeah,
and they're on social media and they
yeah.
got these brokers and companies, attracting
Totally
them
right.
to
Yeah,
getting $25,000 accounts with a
yeah,
small fee. But
absolutely, absolutely.
I think, and then with everything, you get the bad ones disappearing, and then you get the good ones. So we got clients that are doing really well, past assessments, doing really well with their funded accounts.
Yeah.
Things are going very well with them. Um, but then it feels like the whole, and it will get better. I think it will get better.
Yes, it will do.
The explanation of rules on brokers' websites and the understanding of really does confuse a lot of students. That's where we come in at Trading College. We're helping people to understand the rules and that they have to adhere to pass the assessment. And if you're somebody that's has no discipline as a trader, it doesn't matter what brokerage account you've got. If you've got a spread betting account with a London broker, or you've got a funded account with a US funded FX entity,
Mm.
it's not going to work, is it? Because you're just not a good trader, or you've not got the discipline to take the
No,
trades
no,
or
that's
manage
right.
risk.
I think there's a slightly different skill set involved, just with the funded accounts,
Yeah,
just in
yeah,
certain situations, because again, the challenges will, as you sort of say, have some predefined rules. Now,
yeah,
again, it seems to me, that the rules were becoming more and more difficult, to make
yeah,
it almost, difficult for people to be successful. But, again, I put that down to the entities,
mm,
who weren't in it for the trading, they were in it for the marketing,
yeah,
and essentially were there looking to make a quick buck. So I think you're right. I think, ultimately what will happen with prop is kind of what's happened with regulated trading.
yes,
And
yes,
it will essentially sort of self-police itself. It will clean up the space. What's really interesting at the moment, of course, is that earlier on in the year or the end of last year, Meta quotes, were making sure that their platforms weren't available to
mm,
unregulated prop companies. And what we're sort of seeing now, a bit of a vacuum was created, and that's being filled now by regulated brokers.
mm,
Coming in and also offering prop services. So I
yeah,
think the industry feels that there's opportunity there. Of course they would
mm,
do, because initially it was a threat, and
mm,
and now they're able to say, sort of cater for this kind of client, and then eventually the client is going to have a funded account, or they may even just accrue the funds to open up that CFD or spread betting account.
do you
So
think,
it's kind
yeah,
of cleaning itself up. Yeah.
do you think like some of the traditional brokers in London will offer that arm of the service? They will offer a funded. I'm talking the bigger brokers. Do you think
Mm.
they'll go down that route? Because
Um,
surely they've lost clients with funded accounts.
Yes.
Instead of, they've got 2,000 or they've got a small amount of money to trade and they don't want to put it into a traditional broker. They want to just go and risk $250 with the funded account and they might do it 2 or 3 times.
Yeah, yeah, yeah.
You think they've lost that client, haven't they? The spread betting broker, the traditional broker
Yes,
in London.
totally right. And I think that as I say, that initially when that space was really taking off, it was perceived as a massive threat. Now,
Mm,
I suppose the question is, is that eventually, will regulators themselves, start looking at this and
mm,
start trying to move it under their own umbrellas, which is a feeling across the regulated market that
mm.
may happen. And so,
Okay.
at that point, Lee, you're right.
Yeah.
There could be, the ability, to sort of trade through these kind of accounts, through regulated entities. I can't tell you,
No.
what the FCA stance is on it, but I suspect, that at some point soon, a regulator is going to look to make a first move in the space, just because then there's some business opportunities, for
Mm,
wherever that regulator is domiciled. But yeah, it's going to be interesting. I think, that I think it's probably again down to the amounts of money. So,
mm,
I know it's just an example there, but I've met some guys, that have got involved with prop, and that they're really starting from scratch. They're very young. They haven't got much risk capital. They've got a couple of
mm.
£100, and as we sort of say, it's just not going to get you very far on a spread betting account or a CFD account right now.
Yeah.
So, I think that what just could be the case, the broker space will be looking at, how this evolves very closely. As I say, some regulated brokers are now offering these services, albeit to more global kind of clients as
Mm,
opposed to those situated or living in the UK. But yeah, let's see what happens. I think that it's a good stepping stone into full
yeah.
sort of execution only trading. So I think that the industry would be foolish to ignore it.
And if anybody does need a broker, there's a link below, guys, in the description. Trade Nation, they are very good. We'll talk about them on part two. But before we go, Will, I mean, there's loads of questions I want to ask, but we haven't got time. Uh, I want to talk loads more about brokerages, trade execution, and from what's going on at a broker's side, because I think clients need to know about this. However, because we've pretty much come to, I want to, because Tottenham lost at the weekend, mate, against Ipswich, and we'll do part two of the brokerage, guys. We'll definitely
Yes,
do that
sure.
as soon as possible. Um, and just put if you like this, maybe put some comments down below, any of the questions that you might want ask me to ask Will, because you can hear and see that he's pretty much an expert and got a huge amount of experience in the brokerage space. If you want to ask a question, just let me know and I'll ask that question. And give us a like and give us a thumbs up and subscribe to the channel, because when part two comes out, you'll get that notification. But for a bit of fun, mate, and for a couple of beers here, all right.
Okay.
So
Now you're
let's
talking my language.
yeah, let's do right. We'll do two parts. But this is part one. We're going to do the Premiership predictions now. Football. This week. You're going to predict not the scores, but the win or loss. Okay. So I'm going to go
Okay.
through the games that are coming up this weekend, or the weekend of the 23rd and 24th.
Okay.
You'll do the predictions, win or loss to it. And if you get more wins and you get the right answers than me in a couple of weeks after that, then what do you reckon? A bottle of something? Bottle of something, bottle of bottle of wine, nice bottle of wine?
Yeah, that sounds good. Sounds fair. Well, let's see how we
Wine.
go first.
All right. So you got to predict who's going to win the game, all right?
Okay.
And then I'll tally up. The most you get right is your score for this week. All
Fair
right.
enough.
So
Okay.
let's go. Let's just go and do it for a bit of fun. And we've probably lost half the audience now. Anyway. All right. Leicester, Chelsea. Leicester at home.
Oh God! Well, I'd like Leicester to lose because I support Ipswich, and so they're going to be in the mix with us. I think it's going to be. I think it's going to be a draw, 1-1.
Oh, ball draw.
Yeah.
Okay. Arsenal, Forest.
Well, Arsenal are struggling, aren't they? But I reckon they'll win that. 2-0 Arsenal. Yeah, Arsenal for the win. Yeah, for sure.
Okay. Arse, mate. Okay. The Arse. It's been a Spurs fan not liking
Yeah.
them doing well. Aston Villa versus Crystal Palace.
It's got to be a home win, isn't it? Surely.
Yeah, Palace are struggling. One of my best
Yeah.
mates is 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 uh is a Palace fan. It's such a shame to see him struggling anyway. Bournemouth Brighton.
Oh yeah, Bournemouth have done well recently, haven't they? Brighton are doing okay. I think that's a draw.
Draw, ball draw. Everton Brentford.
Oh, they're not very good on the road, are they? So yeah, home win maybe.
What, Everton Brentford? Really?
Yeah, I saw Everton
Brentford
a
are
couple of weeks
decent.
ago. They're pretty good. I think they'll get better.
Who Everton?
Yeah, well they beat us, but
Brentford,
I know that's not.
Brentford a decent side away from home. Fulham Wolves.
Oh, that's got to be a home win, hasn't it? Surely, Fulham are
Yeah,
doing very well this year.
yeah. Now the big one,
Yeah,
City Spurs.
City
Remember Spurs
Spurs.
have done well against City.
Yeah, they do, don't they? They normally bring their A game, and they've got to bounce back
Hmm.
from the embarrassment at the weekend. I still think it's a home window, mate. I'm sorry. I think it's going to be City.
Yeah, I'd agree with you, mate,
I
because
think they
I
need
just
some
think,
points, don't they?
yeah, they need some points. I think probability state that they've had a few losing
Yeah,
games,
exactly.
losing games. I think they'll come back strong. We could get hammered Spurs in that one. On the Sunday games, Sunday fixtures, Southampton, Liverpool.
Oh, wow. Well, I'd like to see an away win, and I think there will be one as well. So yeah, I've got to go for Liverpool there.
Okay, mate. Ipswich, Man
Big
United.
one, the big one. Yeah.
The
Well, look,
big one.
we obviously beat you boys at the weekend.
All right.
I
Yeah.
I I fancy us actually for at least a draw there. I'll probably say a draw. I think it will be a bit too bullish to say a win, but it's going to be Amarin's new first game, isn't it?
Yeah. Yeah.
New United manager, so maybe they'll have some impact from that. But I think we've got a lot of confidence at the moment. So
Mm.
it's not easy to go to Portman Road and get a result. So yeah, maybe a draw.
Sheffield United did, mate, when we beat you in the playoffs.
That was a long time ago. That was a long
That's a
time
long time.
ago.
I mean, Man United, do you not think Man United with their new manager, that new manager coming in, giving that,
Well,
that
yeah,
boost, that
but
momentum?
I mean, again, I just have
Yeah.
to look. All I can do is look at the table. United are mid-table. We're below them, but we've just confidence is high. So yeah, I
Yeah.
fancy us for a draw.
Okay. What about the Monday night game? Newcastle at home to West Ham.
Oh, gotta be a home win, isn't it? Surely.
Yeah. Yeah. They're in trouble, West Ham, aren't
Yeah, I can't say. I don't know.
they?
I think they should have kept hold of Moyes, but
Yeah.
West Ham fans didn't like him.
Didn't like him at all, did they? Well, he done well for them. They won the
He
cup,
did very well.
European Cup.
I know exactly. Yeah,
What the
first
Spurs
time
have done
for
for a while.
40 odd years or whatever it was. I think. Yeah.
Right, I'll tally these up, see how many you
Okay.
get right, and then on
Yeah.
part two of brokerage and brokerage in conversation here and questions, we'll go through. I'll do the predictions for the next week's scores,
Yeah. Okay. Sounds good.
fixtures, and whoever wins, the other person, whoever loses, basically, a nice. What do you think? A nice bit of lunch in the city.
Oh, Christmas is
Uh,
coming up, isn't it? So
oh, of
yeah, we'll
course it
we'll,
is.
we'll have
Yeah,
to have just annual
yeah,
traditional Christmas booze up and
yeah,
work
yeah.
out who's paying for it.
And whoever loses pays for it, basically. All right, so you've
Exactly.
gone from a bottle of wine now to paying for whole lunch. Okay, all
You don't
right.
eat much.
No, we don't need that. Right, that's the deal. That's the bet then.